With interest rates projected to increase this year, many people are wondering if buying a house in 2022 is a smart move. Just today, Fed Chair Jerome Powell has announced that they are planning the first interest rate hike to occur in March in an effort to combat inflation. In this video, we will be discussing whether or not a home purchase is a wise choice for you this year and why buying new construction specifically might not be a good idea, so make sure you keep on watching. Hey guys, welcome back to the channel. If you're new here, my name is Arena. I'm a real estate agent here in the state of Oregon, and on my channel we discuss all of the latest news and developments in the world of real estate, the workforce, and the economy at large, and why all that information is relevant to you. I do also love to post vlogs documenting my experience as a real estate agent. I have a whole playlist dedicated to those videos on my channel, so if any of that sounds interesting to you, make sure you subscribe and turn on the bell notification so that you never miss another video. So before I get into reasons to buy or not buy that are specific to you, let's talk a little bit about what's going on in the market in general, especially as I had mentioned in the beginning of this video, the Fed's recent decision to gradually raise interest rates throughout 2022 and 2023.
The committee is of a mind to raise the federal funds rate at the March meeting.
Now, home affordability is determined by two factors. One is, of course, the actual home price, and the other is the interest rate that you are getting on your home loan. Let me give you a quick example of how interest rate can really affect your monthly payment. So, if we take a $300,000 house, and let's just assume you're putting 5% down on a 30-year fixed rate mortgage. Let's say your interest rate is 3%. As you can see, your monthly payment is going to be around $1,680. This is an estimate given by Zillow's mortgage calculator. Now, if you take that same $300,000 home and instead of a 3% interest rate, you have a 4% interest rate, you can see that your monthly payment goes up by a little over $200. Now you're at a little over $1,800 for your monthly payment, even though the price of the home has remained the same. It's still a $300,000 home. Now, as I said previously, according to Jerome Powell, the Fed does plan on gradually raising these interest rates about 4 times this year in an effort to really try and do something about the rising inflation going on in this country. Jay Powell said today that they are going to be taking this decision meeting by meeting, and he would not provide a concrete timeline of when they plan on raising the interest rates, besides when he mentioned that the first one may be somewhere in March, and he wouldn't say how much they plan to increase the rate by. Now, why is the Fed even planning on raising rates within the next couple years? Now, I've already said why in the beginning of this video. They are trying to fight inflation. Not only are house prices skyrocketing, but the price of just about every other good and service has gone up in the last couple years. House prices actually increased 19% last year, while wages only increased 4%. So people's salaries are not going up fast enough to compete with all of these rising house prices. According to the CPI, inflation was up to 7% last year, which is the highest it's been since the early 1980s. And the Fed's goal is for inflation to be at around 2%. So we've still got quite a ways to go.
Not even close.
This news about potential interest rate increases is enough to freak a lot of people out. But it's important to remember that interest rates are still at historic lows right now, and even though the Fed plans to increase them gradually throughout this year and next, they will likely still be relatively low when compared to years prior. The other thing to keep in mind is that there is no blanket statement to answer the question, should I buy a house in 2022? Because the answer really depends on a lot of factors that are very specific and unique to you, your financial position, your life goals, and we're going to be getting into all of those specific reasons why you either should or should not buy a home this year based on your specific situation. The first reason as to why you should buy a house in 2022 is if you or your family have a very specific need for it. If you're upsizing or downsizing, relocating to a better school district, moving out of state completely, there are so many different reasons as to why people need to relocate to a new house. And if you have a very specific reason as to why, 2022 might be the right year for you to make that change. You also have to make sure that the monthly payment is comfortable for you and that you're not spending a huge chunk of your income just towards paying for your house. If we take the average US monthly income, which rounded up is around $6,000, you shouldn't be spending too much more than 30% of that, which in this case is about $2,000 a month. You also have to make sure that your particular interest rate is favorable. Of course, there is sort of the general interest rate that people throw around, which right now I think we are at around 3.7%, but it's also important to remember that your interest rate is dependent on a lot of factors in your financial situation. So it depends on your credit score. If you have a poor credit history that you are working on repairing, a history of making late payments or not making payments in full, that's going to affect your interest rate. You're going to have a higher interest rate than most people. If you have a lot of debt, if you don't have a safe, consistent, reliable income, all of these factors are going to push your interest rate higher. So even though for most people right now the interest rate might be 3.7%, because your financial situation is not healthy, your interest rate is going to be higher. So if you are in a position where all of that is good to go, you've got a good credit score, good credit history, then by all means, definitely go shop around at different lenders to make sure that you're getting the most competitive interest rate. You can also feel safe about purchasing a home in 2022 if you have an emergency fund, because the reality is that life can throw crazy situations at us. If, God forbid, you get laid off, your employment situation changes, you're making either no money or less money than you were before, you need to make sure that you have that savings cushion that you can pull from so that you can keep making your monthly mortgage payments. I would also say that if you want to be buying a house this year, it would be a good idea to plan on living in that home long term. So for me, I would say that would be about 3 to 5 years, because, even in these next couple years, if something crazy happens in the market, if you are purchasing this home to hold, if you have a fixed rate mortgage, that is, you don't have an adjustable rate mortgage, which please never get those, because if in case the interest rate rises in the future, your monthly payment is going to increase with it. So as long as you have that fixed rate mortgage and you've got a very comfortable monthly payment and you're living in the house long term, then there's no reason you can't ride out that crazy market until you have equity and you feel like you need to sell. Now let's move on to the reasons why you maybe shouldn't buy a home in 2022. And the first reason in this category is if you already live in a home that's comfortable enough for you and your family, where the monthly payment makes sense for you. Maybe you bought this home sometime within the last couple of years and you have a low interest rate on it, like I'm thinking, 2 to 3% interest rate. If that is your living situation, then if you sell this year or next and you plan on buying a new home, the likelihood of your interest rate increasing on your new loan is very possible. Again, if the Fed moves forward with their plan to increase interest rates, which is always subject to change, but that is what they are saying right now, then your interest rate will likely be higher on the new loan than on your current loan. So if it makes sense for you to stay in your current home and you really don't have a specific immediate need to move, I would stay with your low interest rate that you've been able to lock in the past couple of years if you've purchased a house recently. I just don't see why it would make sense to move if that is your specific situation. The next reason why you maybe should not buy a home in 2022 is if prices in your particular city are getting past the point of reason. So if you're looking at these prices and you're thinking, this is way past my budget, way past what I can comfortably afford, way past what would be a good monthly payment for me, do not get yourself into these bidding wars. I know some parts of the country are a lot more affordable than others. I am in Portland, Oregon, where a lot of sort of the average homes are selling for, I would say, around $400,000. Anything below that, you're getting into either condo territory or fixer-upper territory. So for a lot of people, that is, a very high average price. And so if you're finding yourself in that position where you just are seeing these prices are getting really crazy, don't put yourself in a bidding war for no reason. Wait it out and make sure that you are making a smart decision for you. As far as new construction goes, I'm talking about the homes that have not yet been built, the homes that are planning on being under construction this year or next year. I would say that this might not be the year to be buying new construction homes, and here's why. If the Fed follows through with their plan to increase interest rates, new construction homes might be a risky investment. The reason behind that is when you're buying an empty lot that a new home is going to be built on, you can't lock in your interest rate until that home is close to being done. When you're buying an existing home, you can lock in your rate within a few days. But let's say I'm buying a new construction home, I'm putting down my deposit today when the rates are around 3.7%. Let's say that by the time the home is going to be finished, with being built, let's say in the next 6 to 12 months, the interest rate rises to 4% or higher than that. Now my monthly payment is going to be higher than I originally thought it would be. And even worse, this is kind of like a worst case scenario, your lender could deny you your pre-qualification if they see that the monthly payment has gone up past what would be comfortable for your income or what they deem to be comfortable for your income. They could say, hey, the interest rates have increased based on this new information. We are not going to give you your pre-approval. And in that case, you will be forced to lose your deposit and pull back from buying that house. And keep in mind, it's taking builders a much longer time to actually finish new construction homes right now than it might have taken them in years prior. And that's because we're dealing with a lot of material shortages, labor shortages. And because there's shortages in both those categories, both labor and materials are also more expensive. So it's taking builders a much longer time to get these homes to the finish line, which is, in this case, time is your enemy. They're providing ample amount of time for the interest rates to rise before you're ready to lock in that rate. So if I were you, I would probably focus on looking at existing homes this year. I don't think that it's a good time to be looking at new construction, but that's just my opinion. Let me know what you think about that in the comments down below. If you want to see more from me on a more daily basis, definitely follow me over on Instagram. My username is @ArenaD. I often share behind the scenes of my life as a realtor on there, and I also do ask you guys for your opinions and input on future video topics. So if you want to be a part of it, definitely follow me on there. And you guys know that I am a real estate agent here in the state of Oregon. If you have any real estate needs, whether that's buying, selling, or investing in a property, all of my contact information is in the description box down below. I would love to hear from you and help you achieve your home goals. Other than that, I will see you in a couple days actually for a brand new video. Bye.